Thank you so much. Welcome, everybody, and glad to be here. I'm Anil Chaudhry. I am a member of GBA, and what I do is I help lead their AI working groups. So what I'd like to do is welcome an esteemed panel of my colleagues. First of all, I'd like to welcome the Honorable Vit Jedlichka. He is the founder and president of the sovereign nation of Liberland, which has at this point 800,000 citizens. And in his spare time, when he's not presiding over a republic, he's building a metaverse of Liberland with the Zaha Hadid studio. So kind welcome, please. All right. Next, I would like to welcome Ms. Andrea Al-Attar. She is the principal in the law offices of Andrea Al-Attar, where she focuses on compliance issues related to economic sanctions, export controls, money laundering, anti-corruption, all that very cool stuff that you see on television in the crime and punishment series. And she's also the co-chair for the DC Bar International Trade Committee. So welcome. And last but not least, we have Daryl Hubbard, who's the founding member and executive director of the Digital Currency Monetary Authority. Daryl has served in leadership roles in both NIST and ISO, so a lot of national and international experience there. And his work is routinely being featured on, in the UN and the World Economic Forum. So it is my privilege to introduce all these, my esteemed colleagues and our panelists for today. Thank you so much.
Hello. It works.
So good morning or good afternoon, everybody, as you can tell, right? This is a global audience. So I'll really start, with you, Daryl, because you're the furthest. No, I'm just kidding there. But, your experience, you have such varied experience speaking at and, consulting with these international fora. And, one of the questions that often comes up in forums like this is, global financial organizations, the IMF, United Nations, World Bank, they seem to have a significant influence over, the global monetary policies. So, what are some of the challenges that you see in making cryptocurrency legal tender by central banks? Thank you.
What a timely question, because today the World Bank made an article that came out this morning that my research department sent to me. There's 2 countries that has legalized the Bitcoin as legal tender, as we know, El Salvador, and recently the African Republic in Africa, Natural Central Republic. And today the World Bank made an announcement that they are not going to support the African Central Republic in their cryptocurrency hub. And the IMF has also made similar threats to El Salvador. The reason is they view cryptocurrencies as very volatile and speculative, and they offer credit ratings to these governments around their monetary sovereignty, and they don't view cryptocurrency as a solid form of a cash reserve. So that will impact some of these organizations at being able to get maybe good international favorable rating and significant money from these international organizations. But the bigger, and so I would say the broader monetary issue around cryptocurrency, you have to look at 3 dimensions, right? Business, technology, and governance. And it's the role of a central bank to provide monetary sovereignty through money, and to the extent that cryptocurrency can or cannot support a government's monetary sovereignty is critically important. So from a business perspective, widespread adoption is the most important issue. If you issue a legal tender in a country, that means every merchant must accept that, and it should be widely acceptable and used by every constituency. And what are the 4 constituencies? You got the consumers/investors, you have merchants, you have banks, and you have the central bank. And each one of them have different requirements around how they want to use money. Mainly citizens want to use it for store of value, maybe investing. Merchants want to not be able to lose their value if they hold that money over time. If I use a cryptocurrency to sell a product, I don't want to wake up the next day and it's down 20% in value, right? So there's a volatility issue that cryptocurrency has that makes merchants sort of shy away from its usage. And banks, and many people don't think about this, but they in the monetization business. They make money off fractional reserves. So when customers make deposits, they lend against those deposits. But you can't lend against a stable coin. Stable coin is a private asset that's not a depository regulatory instrument. So the banks has no incentive to custody a stable coin if they can't monetize it, right? And same thing with central banks. Central banks need to be able to have control over money. So for example, if inflation gets too high, they want to raise interest rates or do things to control that monetary asset. Well, you had no control over Bitcoin, right? You had no control over these cryptocurrencies. So there's some serious challenges, just from a business perspective, of utilizing a cryptocurrency as a sort of as a sovereign sort of monetary instrument. It's on the business side. On the technology side, it's about faster, cheaper, and better, right? So Visa does about 5,000 transactions per second. Bitcoin part does maybe 500, not even a minute. So there's an issue with transaction speed, transaction volume on these public networks, some of them, and also pricing. Anytime you send a wire through a bank or ACH we have in the U.S., I mean, as long as I've been doing the ACH, it's the same price for the last 10 to 20 years. With these crypto networks, they have miners and validators that changes the gas fees and the prices as you go. A financial services company can't build a model around variable pricing. So there's some business challenges, technical challenges, and the last one is governance. Monetary, as I said earlier, central banks need to be able to govern or have monetary policy around cryptocurrency. Today, they don't have that. So those are part of the biggest challenges, I would say.
Thank you so much, sir. And for the members of the audience that just walked in, just want to say, we'll take questions at the end. So please, we do have time built in for that. And the other thing I want to really mention to the people that just came in is that, we're all speaking, we're in our personal capacities. So anything you hear today and you run with it at your own risk. Don't say, Daryl said this and, so just keep that in mind. I have really esteemed colleagues. I value their judgment, right? But it's their judgment. Use it at your own risk. So just throw that out there today. Now, as you are listening, Andrea, to Daryl, what things come into your mind? And Vic, same thing,
Well, I would say as that we see the global adoption of digital currencies, we are opening ourselves up as well to having increased exposure to illicit activity and use of those digital currencies for illicit activity. And I think the challenge there is going to be balancing the government regulation with also encouraging private industry and innovation so that we're able to take advantage of the technological advantages as well as ability to have increased financial inclusion and equity through the use of these currencies.
Thank you. And this is one of the few times I get a call a president by their first name on a routine basis. So Vit, you have anything else, sir, you'd like to?
I think we are a little bit on a different boat, and I would like to say that I see this from a bigger picture in which I really see Bitcoin replacing central banks in general, and I see Bitcoin being the major drive for a complete revolution in the monetary system. And we have seen what Bitcoin has done so far, but it's really difficult actually to extrapolate what's going to happen in the next 5 years. What will the value of Bitcoin? How many more countries are going to adopt it? And the Bitcoin is so great because no central banks actually can control it, and there is nobody. It's not in human capacity anymore to influence it or to control the inflation, print more money or take them away. It's just as a preset rules that emit Bitcoins, and they will run out in some 1042, or what is the date, when there will be the last Bitcoin minted. So those are all exciting things, and not just that. I really believe that when you mentioned the stable coins and the ecosystems, I see really this new DeFi that is I would say a trend in the last 3 years to be really the way out to replace traditional banking and traditional loan systems. And I see huge potential with the banks turning into DAOs, running DeFi ecosystems, rather than these old institutions that are dealing through SWIFT, etc. So I'm looking at these things from a little bit different perspective.
Thank you so much, sir. And which, it raises a very interesting question, which I'll pose to Andrea, is that, one of the main challenges that a lot of policymakers face is balancing legitimate uses of technology against nefarious uses of technology. And I know you play in this space, you are very learned in this space. So for our audience, can you provide us just a high-level overview of some recent developments in anti-money laundering compliance as they relate to virtual currencies, especially now that people are focused on sanctions evasion and other such uses? Thank you.
Thank you, Anil. So we have seen increased oversight and regulation of this space, really increasingly so in the last couple of years. Both the Financial Action Task Force, as well as the U.S. Department of Treasury, through FinCEN and the Office of Foreign Assets Control, have issued updated guidance for the virtual currency industry on how to identify risks associated with the currency, that they could be used for illicit activities, and what actions can be taken to mitigate those risks. And just in the last few months, we've also seen the Office of Foreign Assets Control take actions, both with respect to a virtual currency mixer and also a miner located in Russia, out of concern that that was generating income for the Russian Federation economy. So we've seen increased action in this space. What can the industry do? Really, this is about the digital currency space being a responsible player in the global financial system. So the global financial system has traditionally played a very important role in combating illicit finance. So financial institutions are at the front line of intercepting transactions that might be tied to bad actors and preventing those from going forward. A few things. It all starts with a risk assessment. Both FATF and OFAC have issued guidance on what that risk assessment looks like. But it's basically understanding your business model, who has access to your platform, to your currency. Are they tied to a sanctioned jurisdiction? Are they tied to a high-risk jurisdiction where we've seen increased movement of funds to hide those funds? Who are your customers? How open is your network? Are you using anonymizing technology? Or are people coming to you who have maybe are coming to you with transactions that are have used anonymized technology or are based in unhosted wallets, things that give you less oversight typically on who is behind those transactions. And the risk assessment needs to evolve as a technology evolves, because as new technologies come out, there will be new risks. What can be done to combat those risks? So both FATF and FinCEN, as well as OFAC, assist by issuing typologies of transactions or types of transactions that could signal that a bad actor is involved, publishing red flags to look for in your transaction monitoring. And then also know your customer due diligence. So we're sort of all familiar with KYC, but how does that evolve as a technology evolves? Part of that is looking at technological solutions. So IP screening, geolocation tools, so you know from what countries people are accessing your tool. Also, OFAC recently, in making certain sanctions designations, has added virtual currency wallet addresses to its sanctions list. So incorporating those into your screening, doing historic lookbacks to see if perhaps some of your customers were tied to those wallets, or even if you can identify other wallets that might be tied to those listed wallets that maybe didn't make it on the list. And then also taking actions to block or intercept transactions where you've identified where there's a risk or a bad actor potentially involved. So there are a lot of steps that can be taken, and it all starts with sort of assessing your risk and then developing policies and procedures to address those risks and incorporating technological tools when you can.
So before I turn it over to Daryl, because I know he's got something interesting to say on this, I'd like to give a plug for the GBA AI Working Group, where we are going to look at some of these technology tools that can help narrow down the scale of where we look for illicit activity so that we're not looking at everybody who doesn't need to be looked at. So with that, Daryl, as you're hearing Andrea, from a policy perspective and your experience in global forums, what are you seeing developments, challenges in this space?
Well, actually, I think it's the technology has a more interesting issue here. So banks have built AI and machine learning around the current traditional financial system, and they sort of have all these alerts and suspicious activity reporting happens around the current system. But there's a whole bunch of learning that needs to happen now around virtual assets or digital currency, and those AI, ML algorithms don't know yet. They haven't learned enough to understand what the risk and threat model is for digital currency. So I think that's probably going to be an area, and probably until they learn that, they really can't put strong policy yet because they're still learning. Like some of the things that Andrea mentioned about virtual IPs and all different type of technology addresses it's becoming common knowledge. But there's so many more sophisticated ways of doing fraud in digital currency that it's not really known yet to a lot of these traditional financial institutions.
So, Vit, I was actually going to ask you the same question, but I'm going to ask you a better question, right? Knowing that, the role that you play as a sovereign, and really what I wanted to ask you in the theme of this question is, as president of Liberland, what role do you see, what role should government play in the blockchain cryptocurrency space? And we'd love to hear, your perspective on that.
Well, I think governments really do have a responsibility to basically fight the bad actors in the economy and make sure there is minimum amount of fraud, and of course that all the criminals are put at bay. I really believe that the role in regulating the currency itself should be minimal, and you can see it's actually very difficult to regulate currency. Even China that is now banning Bitcoin for a fourth time, and it kind of loses the sex appeal when you ban 4 times and it's still not banned. And they also mine 20% of Bitcoin despite the ban on Bitcoin. So you can see that it's not very feasible to push this even in places like China where the central control is super high. It's just that the government loses a bit of credibility when they try to do that. I am a little bit afraid now about EU because the recent proposal about banning all non-custodial wallets is, I would say, a step forward even compared to China, where they're trying to make sure that you cannot have your own private keys to your wallets and that you will have to always keep your Bitcoins basically with some centralized institutions, which I think if they start to enforce it, they will see a lot of backlash. But I just wanted to tell you 2 examples about regulations, and I'm not going to talk about Liberland, where of course we're very free in this regard. I'm going to compare Serbia and Czech Republic, and because I have relations to both of these countries. And in Czech Republic, basically the central bank stated they don't recognize cryptocurrencies and they are not regulating cryptocurrencies. And Czech Republic is one of the places where we have a couple billionaires created just because of the cryptocurrencies alone. I mean, there is the General Bytes is one of the biggest manufacturer of ATMs. The Trezor wallet is the most used wallet for Bitcoin. We have this place, Paralelní Polis, which is very interesting. It was the first place where you could only pay by Bitcoin, and the whole ecosystem is growing around different venture funds. And you can pay with Bitcoin anywhere, and nobody really is regulating it. On the other hand, Serbia decided, and a lot of people from crypto space even applauded it, that they decided to regulate the cryptocurrencies, and they end up with having an environment where it is impossible to use them in any way, in a legal way, which is a bit sad. So I truly believe that the approach that Czech Republic is doing, and I don't think it's an extreme country in this regard, basically ignore the space, let it grow on its own, is the best way. The best regulation of cryptocurrency environment is no regulation.
Thank you so much, sir. And Andrea, as you were listening to this, right, I'd really like to get, like, from a legal perspective, how do you, when you are looking at these issues, two contiguous sovereign nations that have completely different perspectives on a particular topic, and how does that impact, trade and all these other issues, especially if they're contiguous? Thank you.
So as U.S. persons, we always have to be compliant with U.S. law, and the United States, U.S. sanctions and anti-money laundering regulations have broad reach, including to conduct that occurs overseas that touches upon the United States. And so we always have to be in compliance. I think when you come up against these conflicts of law issues, that's where you need to engage with regulators and get guidance and authorization on how to move forward. But they can be pretty thorny issues given how broad the reach is.
So, Daryl, about the same question to you, but in a slightly different vein. We have a lot of members in the audience that are innovators, and you, sir, are a proven innovator, and really like to get your perspective, as the founding member and executive director for Digital Currency and Monetary Authority. When you see two contiguous, sovereign entities with completely different policies, how do you work through that? Thank you.
Well, let's say the banking industry has been around since around the 1700s. Central banking was about over 500 years of history. And during that 500 years, we've had periods of intense regulation and no regulation. And every time there was lack of regulation, fraud, criminal activity, insider abuse. So even in the traditional banking system, right, that's regulated, in areas where there's no regulation or oversight, there's always abuse that creeps out of it. So for the cryptocurrency industry to think they should be free of regulation is just a laughable act of thought, right? So if the trusted monetary system shows abuse, what do you think the private sector is going to do? Be a good actor around regulations? Lack of regulation. So, and it's the role of government and central banks to provide a safe and secure financial environment, whether it's cryptocurrencies, fiat cash, food stamps, or whatever it is. It needs to be safe and secure with all the governance around it. So that's just the role of government. Whether you like that role or not is another issue, but government will play that role until the day of the last of this earth is in existence.
Thank you so much. And at this time, from the audience, we have, it's such a good panel. I'm so honored to be a part of it. We have an innovator, a leader, and a regulator, at the same table. You don't get that often. If anybody has any questions, we welcome questions. The mic is right there. I know it's a shy audience, There we go. Thank you, sir.
So, to your point, and I'm sorry, I just walked in, but I just heard the last comment about regulations. And I've heard from some really smart people that the regulations that we have right now, were they properly applied to the crypto industry, would be pretty effective. But the problem is when Ethereum first launched, they actually launched as an IPO. If you look at the original email from Vitalik Buterin, it mentions this is a security that we're launching. And the regulators just gave them a pass and didn't enforce the laws that were in play at that time because they didn't understand it. So we have the intent of all these laws. We certainly can just enforce them. I guess that would be my comment. What would be your comment?
Yeah, so from a securities perspective, I would agree with you. At least in the United States, our securities laws are intentionally written broad as a framework, and they leave it to the courts to decide on a case-by-case basis as new innovations come into the market. Where in other countries, they have very specific securities laws around specific instruments like stocks, bonds, Therefore, crypto would need regulation. So I would say in the United States, from a securities perspective, I would totally agree, because we don't need a new securities cryptocurrency law from a security perspective. But in other countries who don't have the same framework that the U.S. has around how they define securities, they would need some more guidance, because they look at securities more as a noun. Every type of asset needs to have its regulation, where the U.S. looks at securities more as a characteristic and a behavior. And depending on how it performs and how it acts, they will tell you whether it's a security or not. So based on those definitions, I can look at any cryptocurrency product and tell you whether it's a security or not, regardless of any existing regulation, at least in the U.S.
I'm just, small comment, like, would you think Ethereum would ever be created in any similar shape or form like it is today if all these regulations were actually fully enforced? Like, the whole beauty of this new ecosystem that it actually is freed from these regulations, right? That's why it's so much flourishing. If you start imposing these regulations or you create new regulations, and sometimes they are even well-intentioned, like in Serbia, they really wanted to help the whole ecosystem, but the reality is that now it is illegal to pay with Bitcoin for more than a year, and they're still trying to fix something. But even the brewery that was like the front runner of the crypto adoption in Serbia stopped accepting Bitcoin because they have uncertainty if they're not going to jail, if they will accept it, and there is no legal path for them to do it. So I would just really try to open your mind to the idea that probably even with securities, the best form of regulation is to let the free market, let the free people to decide whatever they want to buy or sell. I know it sounds like a radical idea, but there are some countries that actually use this, and it works very well for them.
Thank you, sir. Next question, sir.
Thank you so much. I'm from Ecuador, a small country in the middle of Colombia and Peru. So my question is, what do you think about applying blockchain for regulation? Because, for instance, drug dealing and all these things are a really huge problem in South America, so that's why the government is working to fight against things. So I want to ask this because, for example, moving the property registrations to a blockchain and moving to applying blockchain for fighting this structure is also a good thing. So I'm working on those projects to use blockchain for regulation, so that is my question, because in the South, the drug dealing, the money laundering is a really huge problem.
So I'll let Andrea handle this one.
So I think I understand your question to be that there are really great applications for blockchain, like increasing transparency, but there are also illicit uses of blockchain. And so how can we regulate the illicit uses, but also encourage the advantages? Is that the gist of your question?
My question is, what do you think that using blockchain was a state for regulating things? Not to try to regulate the private blockchain, create a public blockchain for regulate these criminal structures.
So I think an advantage of blockchain is that is its transparency, that everything is recorded and available on the public record. And so the open access and the ability for anyone globally to potentially access that technology is a risk. But the advantage that is sort of counterweighted by the transparency that the technology offers. So I think it's key to balance those two features.
Thank you so much.
Thank you. Next question, sir.
I would just like to add, if I can, and I think
Please,
that land registry, if I also, you mentioned land registry is probably one of the best uses, and it would provide enormous upgrade in so many countries where the process of land registration is either very corrupt or very difficult process. Just think about it, that really the plots were NFTs that you can freely trade. That would be really exciting, and you wouldn't have to go through a 1 year or 2 years like in many countries.
Thank you so much, sir. And your question, sir? Thank you.
Ryan Cooper from Continuum Market and DeVille Crypto Solutions. What do global politicians need to know about commerce regulations in order to properly regulate digital assets, non-fungible assets, metaverse economies, and play-to-earn economies?
So I'll throw that to you, Vit, first.
Can you please rephrase the question if possible?
So specifically, play-to-earn economies, metaverse economies, these are the kind of the trending things right now, just those two economies. How can global politicians address that cross-border wise?
Well, of course, they will try to enforce their local jurisdiction, and they will try to downplay the role of these new newly created jurisdictions that are going to be, I would say, flourishing in the next couple of years. Either metaverses will declare their own sovereignty, or these, I would say, new governance DAOs that will also claim its sovereignty, and it will be difficult for regular governments to chase people down for commercial activity. But we will see a lot of striving to do that, but I truly believe actually that the future is in that direction, that people will be starting their own countries online in virtual spaces, not just Mars or Liberland, but also in virtual spaces, and that the activity will slowly move from traditional countries to these places.
Well, thank you so much. And you know, this is one of those amazing things about doing these events in person, is that time just flies when you're having fun. You know, and I appreciate the audience. Are we gonna, we'll have question. There you go, sir. Final question.
Appreciate this panel a lot. I have a question for the regulators. Do you, we hear this a lot, you know, the kind of the semantics and definitions. What's honestly the difference between a cryptocurrency or digital asset transaction versus a credit card? You know, it's all digital, money switching from account to account. And then the second question is, why can't these things be considered software packages? They're software, you know, what makes it any different than Windows running on your PC on a network?
Andre, I'll just briefly ask you to address that very briefly. I know it's a very long question.
So I think the distinction is between transactions that are in fiat currency, like the typical credit card transaction that is processed through a traditional financial institution, and non-fiat transactions. So digital currency captures those non-fiat transactions, so virtual currency, as well as representations of sovereign currency, so currency that replaces fiat currency. I think that's a distinction. But the regulations apply equally to both fiat and non-fiat.
So you can get in trouble equally in both places. So, you know, this is so much fun, and I always like to leave the audience on a high note. So, you know, starting with you, you know, Daryl, really briefly, if there was one nugget of wisdom that you could leave with the audience, what would that be?
Invest in cryptocurrencies.
You know, our motto is live and let live. And I think that's the wisdom that we are bringing to this, or we are bringing it back to this world. And I would really love to invite you to the Floating Man Festival, which happens in Liberland on 13th of August. It's going to be actually TEDx conference and big festival. So look into your calendars and please join us.
30th August, hold the date.
1-3.
And I would say we don't need to be afraid of regulation. I think regulation can bring security and stability to the industry and also increase its legitimacy. So there are good things that can come from regulation.
So at this point, what I'd like the audience to do is really give a nice round of applause for our panel. They've been so gracious with their time, really good insights, and I'd like to turn the mic back over to you, sir.
Thank you very much. For our next section is going to be on government blockchain resources, and this is going to be managed by you again. So there we go. Thank the panelists again. You have 10 minutes.
I'll take less than that. I'll take 2. So I was hoping maybe you could pull the slide up real quick. I'd appreciate that. There you go. So what we have, you know, as I'd mentioned earlier at the start of this panel, is that we have a AI working group within the Government Blockchain Association. And one of the things we like to do, you know, we're really trying to jumpstart what AI means and how AI can help make sure that, you know, blockchain is sustainable. And we have a learning series coming up. We have a webinar on Tuesday, June 7th, between 12 and 1. I'm going to be the moderator once again, right? And really would encourage you to come. The link is going to be posted on the GBA website. It's going to be right after our monthly meeting anyway, so, you know, just a longer day. bring your lunch. And what we are really going to talk about is the American Council on Technology and the Industry Advisory Council, ACT-IACT. They really have a good governance. They've developed a good governance model on AI use case and solutions libraries. We're going to describe that, and hopefully what we can do is we can get some member feedback, from the GBA membership on ways that, maybe we could establish our own, blockchain-specific use case and solutions library that's interoperable and shareable. So this is just a learning series. Encourage you to come, and once again, thank you again so much for your time. I know with those sandwiches, I'm glad I didn't fall asleep at the helm here. So thank you so much for your time, and have a great rest of the day. Thank you so much.